Good morning and welcome to Join the Dots, and what a full programme we've got today. Where to start is the biggest question. Now you hopefully watched my videos over Friday, Saturday and Sunday, which were all recorded on Thursday before the Fed cut and before gold and silver responded, as did interest rates in the bond markets in the US. So an awful lot of that was reporting to you people looking at the beginning of last week. Now, not a lot changed at the end of last week. However, maybe a lot more became very obviously apparent. Let's run through it. So just to give you the numbers, Agnico last week up 5.6%, 5.6% in a week. PAAS and XRP were basically flat, one slightly up, one slightly down. But in the month to date, Agnico Eagle up 19.7, Pan American up 16.6, and XRP 3 point whatever. It doesn't matter on XRP, that is a massive journey when it happens. We're just waiting, okay? But equally, Agnico and Pan American and other miners, these are mine, they're not yours, you make your own decisions. The other miners are going to respond hugely. There are going to be incredibly long journeys. They're not trades. I don't trade. I hope you've got that by now. Okay, so long journeys, and as Middelkoop said in Sunday's edition, we're only on the first inning of 9. We really, truly are. Okay, so let's have a look at some of the things that happened. So, what happened? Well, more and more reports are coming out from sensible, thoughtful, researched people who understand that the general investor portfolio across the world, not just the US, but across the world, has a holding of approximately 1% in gold, silver, precious metals and miners, 1%. But we saw 3 very prominent voices come out last week and say, we've changed our view on this. Ray Dalio says 10% minimum 10% gold. Jeffrey Gundlach, now a lot of you might not know Gundlach, but he's the bond king. It used to be Bill Gross of PIMCO, but Jeffrey Gundlach took over his mantle of the bond king, as they call them in the market. He sees 20% should be in gold and related miners, 20%, and it's 1 at the moment. And then we have Mike Wilson, who's a famous bear from Morgan Stanley, but he's good, Mike Wilson. I think I've watched him on Bloomberg and CNBC for the last 20 years. He's solid. What does he come up with? Well, he changes the IFA Bible 60-40 equities bonds. He changes it to 60-20-20. Yes. 60% equities, 20% bonds, 20% gold. That's just the beginning, isn't it? Because we're only at 1%. So who is going to scare you that we're in a bubble? Oh, goodness me, it's our friends at mainstream media. The people who scared you over woke, scared you over illegal immigration, scared you over climate, scared you over investment, scared you over COVID, scared you over vaccines. That's all they know is fear. That's all they ever know is fear. And what have they been saying since gold hit 2,500 just before the end of last year? It's overbought. If anyone believes the mainstream media today, well, how many were there at Unite Britain? 110,000. Yeah, that's right. Yeah, 110,000. If you believe the mainstream media, then you have to pay the consequences. We are in, and I'll link it again, we are in the inversion matrix. And in that matrix, the media are foot soldiers for those who want to deceive you. Deceive you. Think about it. I've got hundreds of reports on health, and I know what's happening. And I know that the mRNA vaccines were not vaccines because they don't inoculate, they don't prevent spread, not a vaccine, just by definition, just by simple definition. But I know now that the worries from those are colossal. You're not getting it in the media. Why? Why? Why are you not getting gold being recommended at 2.5 and now it's 3.7 nearly? Why? Because they don't want you to have the truth. We're living in the inversion matrix. Please watch that episode. Please watch it. Okay? So what happened? So we got to the Fed. I said it would be a quarter, not a half, and it was a quarter. And what happened to US bonds? What happened to their 10-year and 30-year? Look at the charts. I'll pop them up for you. So the 10-year rate is now higher than it was before the Fed cut, and they signalled 2 further cuts before the year end. And the 30-year is now, higher again. The bond market is telling you that everything is wrong. Don't listen to the media. Watch the bond market. The bond market is the largest money market out there, and therefore the most money is more likely to tell you the truth than the most stupid journalist who's controlled. They're totally controlled against you, whether it's COVID, whether it's vaccines, whether it's ESG, whether it's climate change, whether it's whatever it is, immigration. They don't think it's wrong to have illegal immigration, do they? They think we should welcome all these people who've come from France. Well, hold on, if they're coming from France to the UK, then they're not running away from anything, are they? Well, probably France. And what do we see in France? We see a colossal bond crisis. Oh, bond crisis, there it is again. And there's a good piece out on Eurodollar University if you want to find it. I'll link it during this week, because during this week, I'm going to talk about the other macro issues, not the ones I've just talked about in 5 minutes there, and giving you a full rundown on why we're only in the first inning of 9 in this journey. Okay, now let's have a look at some other macro issues. As I've said to you, jobs, 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 jobs. So what did we see this week? We saw Pricewaterhouse lose 1,500 jobs and 75 partners, I think it was, in Saudi. Now this has got some historical problems, but it is symptomatic of the world breaking up. Saudi is moving towards the east, and we know that from the defence arrangement that it's just signed with Pakistan, where Pakistan military have said they will defend Saudi with nuclear weapons if they have to, because they said that everything is on the table. And they have nuclear weapons, don't they? Supplied by? I'll leave you to work that one out. Okay, so jobs, jobs, jobs. And then we've got AI. And I saw a report out this morning, and I haven't verified it yet, and I haven't gone through it in detail. All teaching jobs will be replaced by AI. I can see the logic, and if you can't see the logic, then you're not thinking. The logic is there, isn't it? Children will have a virtual teacher who will be programmed to give them their next lesson, and there won't be a need for teachers. Can you see it? There won't be a need for consultants. We've heard that one last week, didn't we? I gave you that one last week. There won't be a need for consultants. Why? Because AI can do all that. And what are you getting from AI? You're getting the very best answer, not one individual's take on an answer. So what happens when jobs, 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 and more jobs go? What happens to house prices when people aren't earning any money? And what happens to house prices when, funnily enough, the Fed cut rates, but the 10-year and the 30-year rose? What happens? Can you see it? There is a piece out from Eurodollar University also on the house price crash. It's coming. It's coming. And another one that I caught just in passing this morning, Japanese crisis begins. Now, if you remember, if you've watched my channel, you'll remember that Jake Claver talks about the Japanese crisis, and one of the only ways that they will be able to liquefy the system to cope with the yen trade unwind is through use of XRP. All these dots are coming together. There are hundreds of them, but they're all coming together. Silver scares the system. Well, it certainly does. And that is repeated by Miles Harris and the market sniper. Both of them say silver scares the system. We'll get on to that this week. 6% plus lease rates on silver now. 6% plus. Hold on. The American 10-year is paying 4. Silver's paying 6 on lease rates. Risk reward. What's it telling you? So, what else have we got? Oh yeah, Michael Oliver, a friend of ours from previous days. This is just a summary of what we're going to talk about this week. Michael Oliver sees gold at 8,500 and silver at 70 this year end. Not next year end, not the next year end, not the next year end. This year end. He might be wrong, but it's a warning. France breaks its bond market. Well, yeah, we know that. France breaks everything, especially promises to Britain about illegal immigrants. France breaks everything. Always has, always will. China, economic meltdown continues. Yeah, we know that. I've talked about it so many times. And yet again, what does the mainstream media tell you? Tells you that China's growing at 5%. Tells you that China's growing at 5%. When 30% of the economy is completely broken, house prices are still falling for the 5th year. Okay? Yeah? Consumption is down because people haven't got the wealth. Because why? Well, they haven't got the house, have a house value, have they? They haven't got the equity in the house. And they've got another mortgage on another house that's empty because there's 30 million empty units. It's not difficult. You just, join the dots. Here we go. So, the real crash, and I've said this so many times, and I'll keep saying it because it's true, the real crash will follow a credit event. And we are now close to many credit events across this globe. Now remember 2008 became the subprime crisis. But just think how many derivatives there were out there at that time. And AEG had to be bailed out to the tune of 85 billion, didn't it, because of its derivative book. We now know that derivatives are in the quadrillions. We know that. We know it. Yes, you can net them out and you'll come down to maybe trillions. I suspect that the strength in the early part of last week on the 10-year and 30-year was, yes, there was a bit of anticipation of a rate cut, but it was also, I believe, there's money moving from derivative markets. Remember, Exeter's inverted pyramid. Derivatives are right there at the bottom in terms of liquidity. I think that liquidity is drying up. Now, I can't prove that yet. But you know what? I don't need to prove much, do I? Because look what's happening. Do I need to prove anything? I don't think so. I think it's obvious. Common sense. And that's what we've been trained to lose, isn't it? We've been trained not to use our senses, not to use common sense. Just believe the party. George Orwell. So the real crash will be a credit event. It will be a credit event. And that could be Japan. And therefore you look at Jake Claver's site and you look at my report on that and what might happen if the yen carry trade starts to unwind. And it will unwind because the Japanese 10-year and 30-year rates are moving up and up and up and up. And there's nothing to stop them. Nothing to stop them. Okay, it's going to keep going. So tomorrow I'm going to do a special. I've done a full analysis on a very, very good 22, 23 minute interview of Andrew Maguire on Live from the Vault, Kinesis Money. Okay? It is a superb piece. Now Andrew goes into all the very infinite technical details on who's got the gold, what's happening, blah, 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 blah. I don't understand a lot of it. But you don't need to understand the detail. You need to join the dots to bring the big picture together. And then the big picture on everything. Bond markets, COVID. Yes, COVID, yes. Don't ignore something as huge as that. The implications are massive. The money that was spent, the money that was printed, ludicrous. Lockdown, that's why. Illegal immigration, everything. Okay? It is colossal. The dots are colossal, but if you can just pick those dots, link them, you don't need to link every detail. You just need to link enough to give you the big picture. And the big picture screams risk. And everyone is starting to understand that, but we're only in the first inning, as Middelkoop says. So, okay, tomorrow then, Andrew Maguire, a full breakdown of his 22-minute interview, which I think is technically brilliant and likely right. Okay, thank you very much.